And to South Africa now, where the country's Reserve Bank Deputy Governor, Kuben Naidoo, said if Moody's Investor Service cuts the country's credit rating to junk, there could be a sell-off of between $5 billion and $8 billion of its bonds. Moody's this month cut its outlook on South Africa's rating to negative, meaning the next move could be a reduction to junk because its current assessment is the lowest investment grade. That will bring it into line with S&P Global Ratings and Fitch Ratings as well. Like the other two major ratings companies, it's concerned by deteriorating government finances and the indebtedness of a state-owned company such as Eskom Holdings, SOC Limited. For more of these stories, the CEO of Alpha African Advisory, Sanyade Okoli, now joins me in the studio. Sanyade, it's good to have you with us. Good morning.
Thank you. Good morning, Nee.
All right, sir. As we've heard, South Africa's credit rating has come under scrutiny lately, as it were. So what are the prospects for the junk rating by Moody's at this rate?
Well, if you look at the different analyst reports, I think there's a general consensus that in all likelihood that the rating will be, there will be a ratings downgrade. You know, how long they think Moody's will give the government to actually adjust and address the key issues. But I think a key trigger point is there'll be a budget review in February, and there's an expectation that something may well happen soon after that.
There are expectations and a bit of anxiety as well, especially on their local market, as it were.
Well, it's interesting because, again, you know, if you speak to different investors, some are saying they've already priced in this chance of a downgrade when they're looking at the instruments of South Africa. So it's, yes, there's definitely uncertainty, but I think more and more people are seeing it as a likely certainty.
Now, let's take a look at the implication of Moody's current negative rating on South Africa. How would you assess that current scenario?
Well, as you mentioned, it'll be taking it from the lowest level of investment grade to essentially speculative grade. And so, like right now, South Africa is part of the World Government Bond Index, the FTSE Index. Yep. And it's one of 14 countries there. It's got the highest yield at the moment, unsurprisingly, as much as 300 basis points above the second highest. But for you to be listed in that index, you need at least one investment grade from either S&P or Moody's. S&P, as you've already established, already both S&P and Fitch have South Africa at speculative grade. So Moody's was the string it was hanging on. So should it have a downgrade from Moody's, it will have to exit the index. And, you know, what are the implications? That's what the deputy governor was talking about, that the much higher risk of funds leaving, because those who their asset allocation strategy requires them to invest in investment grade assets would have to essentially sell off the bonds. You also expect a increase in the cost of borrowing, etc. So it's not great news.
Indeed, not great news. When you take a closer look at this, the current scenario obviously has some negative implications, and we can take a look at specifics here. The FDI, you know, prospects in that regard. So when that scenario is the way it is, how can investors be confident of their economy?
Well, for me, the ratings are more to do like the portfolio investors in the, you know, the bonds, et cetera, okay. And we've talked about that. But for more strategic investors, I think the general economic climate has even more bearing. As you know, the growth rate in the last 5 or so years has been under 2%, and the forecast for the next 5 years is roughly 1.8%. Again, under 2%. So, you know, the slow growth, the debt burden on government, you know, the increasing unemployment rates, etc. Those are all the factors which, to your point, will influence FDI. And I guess with the recent data that came out in Nigeria, we know how real these things are in terms of in 2018, there was a drop in FDI, and we've seen Q3 2019 a further drop.
Very good. And in addition to some of the factors you just mentioned, government finances and expenditure have also been blamed on the current economic scenario, slow growth in South Africa. So one tends to wonder, is Mr. Ramaphosa under pressure to deliver at this rate?
Well, absolutely. You know, I guess what I thought you were going to ask is, was he handed a poison chalice earlier in the year? Well, it'd be interesting to hear him speak frankly about that. But bottom line is, yes, you know, he's taking over a country that, you know, has been facing a decline. True. But it's just that, unfortunately, should we say, things seem to be unraveling whilst he's holding the baby, which is the difficult part.
And still talking about difficulty, convincing the electorate that you would get something done seems to be the point of focus here. I remember not too long ago, the Finance Minister, Tito Mboweni, had to go to Parliament and more or less like appeal for more time to get things done. So there were mixed reactions to that. In such scenarios, how would you gauge that confidence in governance when it comes to such situations?
Well, it's a tricky one because the reality is politicians will be politicians the world over. And, you know, politicians are, especially when they're elected, will look to the populace. But the reality, sometimes I find this disconnect because it seems like it's not always clear to them that some of the policies they make will actually influence the populace. And I just think, you know, trying to pretend politician here, better to make the tough decisions earlier in your term. So you hope that towards the next elections, you begin to reap fruits. But if you dither, things just get worse and worse. And by the time it's, you know, you're ready for the next elections, as you say, things are unraveling.
Indeed. And it's interesting you mentioned the word dither here because when you take a look at some of the state-run assets, as we've already discussed not too long ago, you tend to think that probably the government is, taking or biting more than it can chew in terms of running them, giving them bailouts every now and then. We've discussed extensively ESCOM, the SAA, as it were. So how would you rate such burdens, as it were?
So assume you're alluding to the whole discussion about, you know, privatization.
True.
Because the reality is these companies, and taking these two as examples, have been a burden on government for quite a few years now. Someone like SAA has been making losses. You know, they've had to pour money into both of these entities. And the question is, for how long do you try to support it, especially in the context of certain government institutions, especially in our part of the world, not always being operated as efficiently as it could be. So, you know, one, you need additional funding, but two, to be able to optimize the operations of these entities.
Very good. We'll talk about Moody's, and we've already talked about the other two global rating company, S&P Global Ratings, and Fitch as well. So, like you said, South Africa is more or less hanging on a thread regarding their own forecast. So in such a scenario, what does that tell you about government's ability to actually make things better?
That's a tough one. Which government? South African government?
Yeah, South African.
It's difficult. As you know, remember I asked the question, was he handed a poison chalice, or did he grab a poison chalice? He's in a difficult position, but at the end of the day, you know, you've got to, as they use the term, man up. You're in that position, and they've got to do what they need to do, make the tough decisions, take tough. There's making a decision, and then there's acting decisively and effectively, and it's just got to be done.
Indeed. Now let's take a look at other issues. Moody's, comparison with Kenyan banks, the Moody's cost-to-income ratio comparison between Kenyan and Nigerian banks. So what do you make of that scenario?
Well, I was pleasantly surprised to find that the actual retail cost of Kenya was higher than Nigeria. Because when I first saw the headline, I immediately assumed that, in Nigeria, lack of infrastructure, power, et cetera. But no, actually. From a retail, from the costing standpoint, South Africa is better. But as you mentioned, it's to do with the net interest margin. So that, remember, it's three top Kenyan banks versus three top Nigerian banks. So we're not trying to generalize across the two industries. The discussion is focused on these three banks. And they have more of a retail base, both in terms of the loans they're making, so they can charge higher than the comparative Nigerian banks, where their loans are to more corporates, which lower interest that they can actually pass on to those customers. And then on the other side, in terms of their cost for the deposits, again, because they've got a larger retail base, their cost of funding in Kenya is lower than here in Nigeria.
Yeah, larger retail base, as it were. So, like we said, a greater exposure to retail clients partly explains Kenya's advantage. So, is Nigeria lacking this despite current efforts towards financial inclusion? That seems to be the swan song lately.
You know, I need to have money to put in the bank. And we've spoken about, you know, the lower GDP per capita, the lower disposable income, etc., etc. So running around chasing people who may not actually have that much money is, some would call it a fool's errand. You know, in the big picture, it's not that they don't have a retail. Remember, we're just comparing three sets of banks to a set of three banks to another set. And, you know, with financial inclusion, progress has been made, not as quickly as the central bank governor would have liked, but progress has been made. And we've got to remember that because we're just looking at these three banks, so financial inclusion, where they're using more, you know, digital services and microfinance banks, etc., etc., those figures won't feed into this discussion.
Indeed. And on that note, Sanyade Okoli, I'd like to thank you very much for your thoughts on these issues. Good to have you with us, as always.
Thank you.